Hello, everyone. Today, I would like to tell you one of the interesting news. Interest rate has increased after the September drop. Okay, welcome back, everyone, to my market update on Monday. And today, we are going to talk about a topic, a very, very hot topic that everyone worried, concerned, interested about, which is interest rate. Okay, specifically interest rate for mortgage option. All right. And let me show you the information that we have. In front of you right here is the interest rate for the 30 years fixed rate. Okay, this is the rate. This is collected from Freddie Mac. Okay, and specifically, we are going to look at the period around October and September of this year. In September 18, 2024, okay, the Fed announced that they are going to cut interest rate by half of a point. Now, be careful that that is not the interest rate of the mortgage rate, okay? But that is not the topic for today videos. Anyhow, the Fed the main point that I want to bring up is the Fed announced that they are going to reduce interest rates. And the week after, it's actually reduced to 6.08. At that time, everyone like, okay, yay, yay. We actually have an interest rate reduction and everyone is excited about what happened next. Now that I know this is a typo. This is a typo on my presentation. Sorry about that. Okay. Um, so everyone interested about the drop of the interest rate, and however, though, as you see, the chart actually goes back up. And as of today, we have an interest rate as of 6.54% for the 30 years fixed rate. Some of you may say, what does that mean to me as a home buyer? Okay, let's do a quick math. Okay, with a $400,000 purchase price, okay, and with a loan amount of 320, you actually have a monthly principal and interest payment of 2031. Okay, so that is number one, as of 6.54% interest rate with the same loan amount and the same with a different interest rate, you actually have at 6.09, 1,937, at 6.08, 1,935, right? So compared to the lowest point compared to the lowest point in September, your monthly payment has increased $100. Some of you may say, $100, not too much. Don't worry about anything, right? But that $100,000 is $1,200 for the whole month, for the whole year, right? And and some people that is considerably a lot of money, and it's also the tipping point between whether you can qualify or not. Okay, so $100 seems not to be a lot, but when you do the debt to income ratio, it's become even bigger, and some people may not have that extra income to qualify for that $100. Okay, so that's the problem. That's the situation that we have right now. So instead of, regardless of the Fed already reduced the interest rates, the mortgage interest rate is actually goes up. So is back is the question: should I? A lot of buyers ask me, should I hold out for lower mortgage rates? Okay, should I wait for the lower mortgage rates to start buying a home? Which is the fair question, right? Because you don't want to spend too much on your house. Especially the monthly payment is very important factors in terms of calculates the monthly budget, because you have to evaluate, okay, I collect in this much of income, I spend this much of money in regular living, right? This is my monthly payment, whether it's acceptable or not, right? If $100 increase, then I probably have to reduce my eat out $100 by $100, right? Even my income doesn't change, right? So that's a lot. That's the very fair question, and I have to answer this question based on three different data points. Okay, three different data points to be able to answer this question. Number one, okay, the question in general is that buy now or wait, right? Number one, all right, we have to depend on the demand and the supply in the market. Generally, when the interest rate goes down, the demand in housing is going to higher. The demand in buyers is going to higher. Why? Why? Tell me. Everyone, everyone wants, everyone would love to have a lower interest rate in the mortgage, right? Even if you buy a $400,000 house or $1 million house or $2 million house or $500,000 house, everyone buying a house with mortgage would love to have the lowest mortgage interest rate as possible. And therefore, when the mortgage interest rate drop, the demand is higher and you have to facing competition, right? So if you're feeling that you like, that you are able to competing with those people with the big pool of buyers, then you should wait. Okay. But before you answer whether you should wait or not, okay, let's hear the question. Let's see. Let hear me out. This is the reason number two. Okay. It's only specific for this time of the year because we are actually in the election year, right? Out of the last previous 8 election year, the following year of the election year, we have the home price actually goes up. The only year that the home price goes down is actually in 2009, which is the year that's happening to the financial crisis, right? We don't have any signal of that happening again this year. So it is safe to assume that it's gonna home price gonna go up based on the data, based on the data of the previous 8 election year. So in another word, we are facing a higher demand. Number one reason, and the second reason is the higher price, right? So even though the mortgage rate drop helps, but you have to competing for the house and you have to pay a higher price, right? So if you are not the person who want to face competition, if you are not the person is um, who is willing to pay higher price, okay, but you still don't want to buy because you're hoping for something else. All right, let's hear me out. Here's the third reason. Okay, the third reason is this: you have to think about this. If you're scared about real estate, think about it. Okay, a home that probably your parents or someone you know who bought the house 20, 25 years ago. Okay, you might asking, some of your cousin, for example, bought a house in 1993 in Chandler. It's only like $100,000 back in the day, and you're so lucky you bought a house. It's a very good time. No, they're actually not. Okay, because back in the day in 1993, who knows home values in China are gonna goes up like this. Okay, that same house, 1993, $100,000 house now could value to five or $600,000 already. And given from 1993 until now, it's already like 20 years, right? So their mortgage payment is very minimal if they keep paying and if they still keep the house. So they're sitting on a very big amount of money by doing nothing, by just paying the mortgage payments, right? So, long story short, my point is that if you worry about the market of whether it's interest rate going down and low or not, if you worry about the fluctuation of the home price and you are not sure, even though I already showed you the data, you're still not sure that the price is actually go up. What if it go down? Like what if the interest rate go way low down? Like you don't know. We don't know. What if there's no competition? Like we don't know the future. The only thing that we know for sure is this. Okay. If you hold a real estate long enough, you will eventually get a big equity in return. Okay. So that is we know for sure. And you may ask, how long is long? Okay. I would say 3 or 5 is not very long, but it's already have some some time appreciation in that already. But if you are able to stay in the house about 7 or 10 years or even more, for sure the real estate is actually goes up. So my point is this: if you're thinking about not moving anywhere, if you predict that okay, I have a good job, my income, my family is stable, my kids are going to grow up in this area, in this school for a little bit long, then definitely don't have to worry about the market. Because think about it, even with the financial crisis in 2009, right, when the home price goes down, now it's go back up again already. So after 20 years, it's going back up already. So my probably I hope that I don't give you the wrong impression that you have to be in one house in 20 years, right? My point is that if you're thinking about buying a house every year, you probably have to worry. But if you're thinking about staying in the same house for like 3 or 5 or 7 or 10 years, then you're probably okay, regardless of how the market is. Okay, so that's what I want to share with you in this episode, and I hope that I bring good information to you. If everyone interested in learning more or have any question about the real estate market, please reach out. My phone number is 480-480-7948. Thank you.